Hey, I'm here today with Ellie Mills of Windermere to do a 2025 market forecast to give you the information you need to know before selling or buying a home. So, Ellie, what was 2024 like for you?
It was, I would say, from a real estate perspective and in our market, it was not a good year. Or rather, it wasn't a bad year, but it wasn't a great year. Me personally, it was not quite my best year ever, but not far from it. But from the big thing we're suffering from at the moment is just lack of inventory. And the fewer houses we've got to sell, then obviously the fewer transactions that can happen. And the bigger the impact it has on the market. But 2024 pretty much played out as we would expect a typical real estate cycle to happen in terms of its seasonal trends. And it would seem that despite the high interest rates, buyers are still at it.
Yeah, I think a lot of people have come to terms with the rates are what the rates are, and I want a home. I can afford the home, so I'll get it now.
Yeah, I mean, we've got, there's essentially, divorce, diapers, jobs, there's one death that will always drive real estate market. What we're not finding at the moment, we haven't got that fifth D, which is the discretionary moves. There's, I think, 1 in 5 50% of homeowners in, I'm going to say King County, I don't think it's Washington State, sorry, I'll fact check that, is sitting on a mortgage rate that is below 5%.
Yeah, and they don't want to lose that.
They are not giving that up. And if it's tough. 2.5, 2.75, 3, would you give it up?
It's hard to walk away from.
The numbers don't make sense.
No.
They literally don't make sense.
No.
So that's what we're seeing. It's the lack of the discretionary moves. So people are moving if they have to and if their life circumstances are determining it. But we're not seeing, and didn't see last year, and I don't think it's going to change this year. It's not those people who are like, well, I'd like to be in a smaller house or I'd like to be in a better house. But the numbers just don't make sense.
No, it's tough.
Yeah.
And talking about rates, so average 30-year fixed mortgages, currently they're around 7.11%. This time last year, they were 7.08%.
Okay.
So they're pretty much
unchanged.
unchanged.
So we're pretty much where we were.
In September last year, though, remember we had that dip in rates down to around 6.1%, and 8 days later they shot back up. So
the October bump.
Very short-lived, yeah. And the peak, going back to October of 2023, we were over 8%. So we were locking in rates at 8, 8.25, 8.5 back then, and activity was still high.
Yeah. Well, I can tell you that people who didn't lock in October 2023 are wishing that they did.
Yes.
Because prices have only gone up and rates have not come down as we all predicted that they would last year to the level that we thought they would, right? At the beginning of the year, a lot of the economists were saying, we'll be down in the 5s by the end of 2024. Well, we all got that wrong.
That was wishful thinking.
That was wishful thinking. The one thing I know now, and I'm glad I'm not in your shoes, is don't try and predict interest rates because they're going to do what they're going to do.
Yeah. And there are so many factors that move markets. So it's impossible to be 100% accurate. But we listen to a lot of people who are far smarter than us that have a history of being able to accurately predict what the rate range is going to be by the end of the year. Interestingly, even with rates as high as they were in the Seattle market, people think higher rates are going to slow down sales and that's going to hurt valuation. In the Seattle market, appreciation was 6 to 8% last year.
Yep. About on average it's what we had. So somewhere between 5 to 10%, yeah. So 6 to 8 is probably
So the demand,
east side a little bit more than the Seattle side.
Yeah. And the demand is always going to outweigh that. So looking at the forecast from different organizations, Realtor.com believes that rates are going to be at 6.2% by the end of the year. NAR thinks they're near 6%. Zillow, they haven't weighed in on this yet. They're still collecting data. And MBS Highway, who I follow religiously, Barry Habib over there, he has consecutively gotten very close to what the forecast is going to be by the end of the year. And he's thinking they're going to be around 5.75% by the end of the year. So if we break below 6%.
I personally think if we break below 6.5%, I'll take it as a win. I really don't think we are. From what I'm hearing from the economists that I follow is that, a lot of it I think is going to depend on really the next 100 days, right? We have got a new administration that is making all kinds of changes.
Been very busy, yes.
He's been very busy. We've got the topic of tariffs. If tariffs do come into play, and again, I'm not an economist, I'm parroting what I'm hearing, it's going to have an impact on inflation. At some point, therefore, is the Fed going to have to do something to reduce the federal rate of interest, which, as we know, is indirectly related to the mortgage rate.
Yeah, mortgage rates typically follow the Fed fund rate.
Yeah.
So it's a bit of a lag. Well, that's not necessarily true either. When the Fed announced last year that they were going to start doing rate cuts, the mortgage market already built it in 30 days ahead of time.
It preempts it kind of thing, doesn't it?
So it happens right away, and then they make the cut. So there is that misconception on that and misunderstanding.
But so far, we're hearing that there's going to be no rate changes to that in the next 6 months.
They're pausing for now based on economic data. Today, you may have seen the JOLTS report came in. The job opening report came in over 500,000 below estimates.
Okay.
That's a huge miss. So we'll see how that plays out.
Which I'm sure will be corrected next month.
We'll see.
And we'll have another number.
Yeah. So going back to home sales rates, where everything is, looking at the cost of waiting, if you were to buy an $800,000 home now with 10% down, where rates currently are, your total monthly payment, taxes, insurance, mortgage insurance would be $56.84.16. And a lot of people are thinking, well, I want to wait till rates are lower. I'll lower my payment, save more. The problem is with, and this is a NAR statistic as well, they believe that with a 1% reduction in rate, there's about 4 million new homeowners that are going to enter the market.
More importantly, it's about a 10% change to buying power. 1% change in rate is about a 10% change in buying power. So if rates go down, you can afford 10% more house.
Correct.
So therefore, people are far more willing to escalate higher, right? It becomes a little bit cheaper.
That's the challenge too. So even though home appreciation, they're estimating 10 to 12% for 2025 for the Seattle market, then we have more bids coming in, more offers. It's going to push the price up. So the house you could buy now for $800,000 in a year could cost $900,000. Yeah. So your payment goes from what it could be now, $56.84, up to $59.20, and you're paying more for the same home. So that's the real cost. Yeah. And that's these are real numbers, and I want to put this out here so folks can see what that actually looks like, because it does make a big difference. Obviously, the best advice: buy now, refinance in 2026. So you know, $800,000 now, 10% down at a current rate. Your payment is $5,043 after you refinance next year.
Yep.
And your cash to close is significantly different as well. So cash to close, buying now would be $93,127 versus waiting a year where you're going to have to put down more, $103,889. Big difference.
It's a big difference. There's no doubt that buying sooner is, you're going to save more money in the long run. We went through, being realtors, when rates suddenly shot up in 2022 and 2023, our mantra was marry the house, date the rate. And I think there was some truth in that. I'm now shying away from that because I think it potentially encouraged people to push themselves too far because they were fairly confident that rates might come down, right? I'm like, yes, it's going to be cheaper now to buy in a year's time, all things being equal, but make sure you can manage it today.
Correct.
Buy a house that you can comfortably afford on the rate that you've got, because guess what? We have no control over it and no guarantees over it. And I like to think that they're going to come down and you can refinance in 2 years' time, but who knows? We don't know. They could go up. And historically speaking, the rates we have now are not too bad.
No.
Right?
No, they're not. Not at all.
And who knows if we're going to be in a 10% situation in a couple of years' time. I don't think we will be, but
we don't know.
I just don't know.
There's too many things that can happen in a short period of time. Another thing too is the cost of waiting goes. Looking at buying now, the net worth in 5 years is going to be $496,000.
Yeah. There is no doubt that to build real estate is the best way. It's not the quickest way to build your personal net worth. The statistics that are out there that people who don't have aren't homeowners, their net worth is about $10,000, and this is a national statistic. Whereas those who are, it's well up into close to 500,000. So it is by far and away the best way to build your personal wealth. We do say, and I do believe in this, you don't wait to buy real estate, you buy real estate and wait. You're not going to get rich quick. Don't buy it today and sell it tomorrow. That's going to cost you money.
Sometimes you can, but it's rare.
It's
and
rare.
You really have to know the market.
You really have to know the market. You really have to know what you're doing. Yes. If you're flipping, yes, you can do it that way, potentially. But I've also heard a lot of stories.
Yes,
that doesn't always work.
Well, yeah. Sometimes
take Arizona as a market, for example, right?
Vegas.
Or Vegas.
Yeah.
Arizona is still recovering in the Scottsdale area from those iBuy buyers over 2020, 2021, not so much 2022.
And you spend quite a bit of time there, so you know.
Yeah, I don't follow it as much as I do up here. Obviously, it's not my market. But, I keep a keen personal eye on it. And yeah, don't get me wrong, there's still some flippers down there that do it well and can do it successfully. But when you look at the supply demand, it's not a slam dunk.
No, that's very.
And it's certainly not a slam dunk up here. Just mainly because of the cost of contractors now.
It's a calculated risk.
Yeah.
Has to be.
You have to know what you're doing.
So anything else you'd like to add as far as what you're seeing for 2025 or what you're hearing?
I think we're in for a good year. I think there's no doubt that we are going to have a better year than last year. And by that, I mean, we're going to have more transactions. I think all data sources are pointing to that. NAR have indicated that we're going to have, I think, about 4.5 to 5 million transactions nationwide compared to, I think we were about 4 million this year. So we are expecting a bump in transactions, which is going to help everybody. I think in our part of the world, we're going to have a very competitive spring. Typically, we see February to May being, I'm going to call them the boom period, when we see the highest number of multiple offers, the highest, the median amount that they're selling above list price generally hits its highest. I have a little tiny feeling now we're only 4 weeks into the year, and real estate doesn't really start, it doesn't start the 1st of January because it takes a while. But based on what we've seen in the first 2 weeks of January, I am wondering if we are going to peak early this year. We are already seeing homes sell significantly more above list price than I would typically expect for January. So I wouldn't be surprised if we have January to April. Maybe it will be a longer time. Maybe it will go all the way January to May, June, and then we'll start seeing it quieten down. But that's the big question at the moment, the big unknown. Are we going to peak sooner?
Time will tell.
Only time will tell.
Does.
Only time will tell. Prices are going to go up. You said, I think
10 to 12%.
Yeah,
and it depends on the area.
It depends on the area. So I heard a stat that for King County, they're expecting about 5%. Now, King County obviously covers a pretty good, decent area. On the east side, I think we'll be higher to the 10%. I don't know if we'll get 10% appreciation this year. I kind of hope we don't, to be honest.
Likewise.
I think we could do with a normal year. It would be really good if we had a normal year of real estate.
5-6%. Yeah.
And that's the average. The long-term average in King County is about 5.5%, and that's where it should be. And I hope we get back there. I recently did a bit of an analogy for the real estate market, wishing it would be normal, and I compared it to like a vanilla ice cream with a chocolate flake, right? Vanilla ice cream never disappoints anybody. But in a chocolate flake, you got a little bit of excitement if you want it. I really hope we don't go much beyond that. And that would be really nice.
Not too many sprinkles.
Not too many sprinkles, okay. Right? We want, normal year in real estate, no great surprises, playing out as we would expect, which is going to be the first 6 months of the year will be the strongest for sellers, and then it will tail off a little bit. Doesn't make it a bad time to sell in the last 6 months of the year by any means. But there are fewer buyers, and those buyers are out there a little bit less aggressive than they are in the first 6 months of the year.
Great. Well, that's all I have. And anyone out there who has any questions or needs help, feel free to reach out to us. We're always here to help you achieve your goal of home ownership and increasing your net wealth through real estate. But that's it for now. So thank you for coming in again. And
you're welcome.
we will be doing this again soon.
We sure will. All right. Thank you.
Thank you.